Our guest tonight is Tina Fordham, a Wall Street legend who was Wall Street's original chief global political analyst, spending 17 years at the Citigroup. She created Eurasia Group's financial markets research business, was appointed to the United Nations' first high-level panel on women's economic empowerment, and has served as a senior advisor to the UK Prime Minister and 2 and 3-star generals. She hosts The Navigator, produced in collaboration with the London Stock Exchange, and is a frequent guest on CNN, CNBC, Bloomberg TV, and Monocle Radio. Tina's forthcoming book, Mad World, a geostrategy survival guide for leaders, will be published in September 26 by White Fox. Welcome to the show, Tina.
Thank you for having me.
So, Tina, starting with your experience as a geostrategist, you've been an industry leader in the area of geopolitical analysis for institutional investors as well as board and C-suite leaders for over 25 years now. How has the demand side of the equation changed during this period? Also, Tina, what kind of questions are most dominant now compared to the previous periods?
It's a great question because over the course of this 25-year span that I've been working at this intersection between geopolitics, financial markets, and the business environment, the nature of the questions and the kind of the queries that are driving interest in geopolitics have changed profoundly. When I first started back at Lehman Brothers and working with Eurasia Group around 2002, it was in the aftermath of 9/11, and in the wider context of developed market investors wanting to invest in emerging markets. And so they were looking at Brazil and South Africa and Russia and India and others. And the question, that they started with at that time was, how long will it take these EM countries to become stable, to become more like us? There was a certain inevitability that they would become like industrialized democracies. Now, obviously, that hasn't been what's transpired. And so the whole notion of what we designed at that time, a political stability index, seems ridiculous. No one's even thinking, the United States isn't politically stable. But we didn't get to that point until the global financial crisis. And that's when we started to see questions about developed market political risk for the first time, really. And so that kind of arc over this period of, starting out with how to find opportunities in emerging markets to how to navigate developed market politics to the idea that geopolitics is everywhere and intensifying has really shifted. But despite that, classically trained economists see geopolitics as a negative externality and haven't really changed their view, I would say, since.
What about the nature of the geopolitical context itself, Tina? I mean, how has it changed? Are we seeing more geopolitical risks than that in the previous eras, or does it just feels like that?
Is it the 24/7 news cycle? What kind of metrics can we use to try to understand whether the world is actually spinning faster than it used to, or whether it's just kind of more noise? And of course, market participants are very fond of the signal versus noise construct and tend to dismiss political developments unless they cause price action as noise. And one of the things that I've been passionate about in my career is arguing against that, because it's more a case that geopolitical developments can be pivotal or significant, but not yet is significant enough to break through and cause a change in trend when it comes to markets. But Geopolitics Supercycle, what we wanted to do was try to find a way to address empirically that question that people were asking, is it my imagination or is this really happening? Because for board leaders, for example, for corporates taking business strategy decisions, the impulse has been to think in terms of mean reversion, and mean reversion has got you through most of the last several decades. That and QE from central banks, which has buffered
Right.
the impact of, what we might want to call bad news. So what we did was look at the period between 2010, so the tail end of the global financial crisis, and the end of 2024, so about 15 years um, period, and we looked at a range of shocks that you can quantify. So the number of conflicts, incidences of civil unrest, cyber attacks, climate change events, and probably most significant for this audience, economic statecraft. We brought them together, looked during the course of this period, and were able to conclude that the period between 2010, beginning of 2025, saw a tripling of geopolitical risk events.
Looking at the state of the conflicts between Russia and Ukraine and now the Iran situation, Tina, both of which have lasted longer than market participants expected, as you just pointed out, what are the possible off-ramps and time horizons in your opinion? What about the butterfly effects of these wars?
We talked a little bit about Greenland, which, even though it didn't turn into a conflict, has triggered a number of butterfly effects already. We talked about NATO expansion. You could put Iceland having a referendum to join the EU in that basket, and the fact that the European Union, after 20 years, finally managed to sign a trade agreement with Mercosur, likewise Canada with India. These developments are butterfly effects of that change in trend coming from the US, which was crystallized in the Venezuela extraction and the Greenland threats.
Why do you think markets, central banks, and business leaders consistently minimize geopolitics? Has the penny finally dropped, or do we need to see a dramatic one or two standard deviation event before that actually happens?
Because it's very difficult to quantify. And I would say it's a relic and a luxury belief of the previous era that you could just park geopolitical risks in a column that didn't fit into your model. And I would go further and say that geopolitics is now driving the investment environment, not only in terms of risks, because if we look at the AI trade, metals and mining, precious metals, commodities, agriculture, infrastructure, defense. This is all about competition, and that's what geopolitics is all about.
Regarding the US monetary policy, Tina, I think the FOMC is a divided house with no clear signals on rates. And the dot plot is right now making no sense at all. Nevertheless, in my view, at least two rate hikes are warranted given the geopolitics, along with the strength of the US economy turbocharging inflation expectations. What are the learnings for global central banks on rates and policy making from the geopolitical events that have been tormenting the global economy since the Ukraine situation?
I mean, I'm very careful not to get out of my lane and
Right.
make calls on the rate cycle, but I
Mm.
think part of the answer to this question depends on some of the themes that we've touched on about, how do we know this is real? How do we quantify, the if the IEA chief says that the war and the closure of the Strait of Hormuz is the biggest energy shock since 1973, Brent is still under $100 a barrel. So, there are a lot of surprising disconnects in the picture. I do think that the inflationary outlook as a result of these conflicts, the impact is much more pronounced in EMEA and Asia Pacific
Right.
than in the United States. And that's going to result in a divergence. And the Fed is also, even though we don't like to say it and we don't want to say it, they're under pressure with midterms coming up. We know what President Trump thinks and wants the Fed to do, and
Right.
he sees it as political if the Fed doesn't cut rates. So, they under Jay Powell have had to walk a very careful line. They're not going to preemptively, I don't think, price in geopolitical risks.
With that background, what kind of impact might the US midterms bring in November? Do you think the US will ever return to being the guarantor of the global security and trade order of the past 50 years?
For non-Americans who are puzzled and confused by the change in US stance and by extension think that perhaps Republicans will, suffer at midterms and perhaps lose in the next presidential elections in 2028. I would just say that I think that the change in US public attitudes really goes beyond Trump and goes beyond MAGA in terms
Yeah.
of the sense that the U.S. shouldn't have such obligations, and that other countries should do more for themselves. I think that runs quite deep. And, to use the language of the markets, the benefits that the United States has enjoyed as a result of being the guarantor of the world's, waterways and the trade um, agenda is priced in. Nobody
Right.
remembers a time when that wasn't the case. And so I do worry that we are in for, not just a 1 to 2 year period, but more like a 5 to 20 year period of recalibration. And there's nothing like volatility to really invite opportunistic actors to make a move.
Tina, recently Bloomberg Markets John Authors, while praising your forthcoming book, Mad World, a Geo Strategy Survival Guide for Leaders, said, and I quote, Tina Fordham has long been an invaluable and distinctive voice in the debates over geopolitics. She is brilliant both at distilling which issues matter and which can be ignored, and in making the importance emphatically clear to the powers that be. In a mad world, she is a vital voice of sanity. End quote. In this context, Tina, you've had a very unusual career trajectory, which you describe a little bit in your book. Can you share some highlights about this book with the audiences?
Sure, I can say a little bit about it. I have had a completely bonkers career. I started my pre-finance career looking at the post-communist transitions in Eastern Europe and the former Soviet Union, really just out of intellectual interest and
Mhm.
human interest. Geopolitical changes can happen seemingly overnight, as was the case with the fall of the Berlin Wall, where suddenly
Yeah.
people were pouring over the border and the system was just finished. And even weeks or months before, you would have found very few people who could even have imagined it.
Hmm.
So the change can happen quickly, but the adjustment and the sort of new paradigm actually takes quite a long time to settle and to emerge. These lessons really stayed with me, and I've brought them through to my work. We are now at a period where human behavior and this competition between great powers as well as middle powers who don't want to be rule takers. And I can't
Right.
emphasize that enough. Canada and India and Mexico and Brazil and Europe and Japan and Australia and Nigeria and South Africa do not want to be taking, direction from the United States and China. They want to act in their national self-interest.
Mhm.
And for all of the kind of I think almost hope in some ways from market participants that we'd have a superpower tripartite world that would be orderly, we're not heading that way. We're going to see the middle powers look to bolster their own security and stability. It's going to impact investment, and it's already translating into just a huge wave of M&A. It is partly because of geopolitical competition, but I think that people don't see the trends for what they are. The book's intended audience is the same audience as my advisory firm. It's decision makers, senior decision makers. Fordham Global Foresight mainly works with C-suite leaders and boards, as well as institutional investors. Increasingly, I'm doing executive education and training. That's something else that's new compared to previous eras where I'd be sort of wheeled out to talk about what might go wrong in the world. Now, I think leaders realize that they need to be better equipped for thinking. But for most of us, you just haven't had to have a mental map of the ecosystem, if you like, of the way the world works. The
Right.
furniture of the international system, as Henry Kissinger would talk about it, just didn't come up in the boardroom. It was all about the opening up. It was all about where the new emerging markets, middle classes would be found, where prosperity would lead to, the ability of more US multinationals to find new markets. And now we've got something that looks quite different. We really don't know what the impact of artificial intelligence will be on the job market, and on, let's say on the socioeconomic outlook. And very little time has been spent on that. I mean, these are the kinds of questions that interest me the most because they're hard to quantify. So they do get left out and they do get ignored. I always ask audiences or small groups like boards or leadership committees about what they think about the state of the world because it's so telling. So it's really simple, but I ask every group whether they think the world is getting better or worse, and whether it's better now
Right.
than it's ever been or worse than it's ever been. And the pattern is I think it's counterintuitive. It's the people in the richest and most stable countries that think the world's worse than it's ever been, and it's the people in places like Brazil and South Africa who are more positive. And I think that's fascinating because we tend to believe that affluence and political stability brings with it a kind of a contentment, and that does not seem to be the case. And my own explanation for that is momentum, a sense of positive momentum, even if it's from a relative lower base, does lead people to be more optimistic.
The two or three things leaders can do now to boost their PQ, that is political quotient in the current geopolitical environment.
I think that you've got to bring in geopolitical considerations into your boardroom discussions, even though if they don't lend themselves to the kind of traditional corporate accounting approach of being a 0 or a 1. I think you've got to take geopolitics out of the risk bucket and make it part of strategy. And even though it's difficult to quantify, you can be more systematic. There are many open source indicators and others that you can be using. So we've got to look with fresh eyes, challenge preconceptions, and use more data.
Well, on that note, that's all I have for today, Tina. It
Thank you
was
so
an
much.
absolute pleasure and honor to host you on the podcast.
Thank you for having me. All the best.